Good evening and welcome to the Perspecticast, the companion podcast to the Panda Perspectives Substack. There is no better time to talk about China than the early March, which historically, traditionally has been the starting point of the two sessions, the legislative prime of the Chinese representative process. The two sessions refer to the National People's Congress and the Chinese People's Political Consultative Conference, the two bodies that meet early March to discuss the legislative agenda for the year ahead. Obviously, this is a complicated process, one that we're not going to delve too deeply into, but, there is a summary of it and the entire Chinese whole process, democracy process on the Substack. So if you're interested in that, please look through the archive. There is a fairly detailed explanation of that. I would, however, note that this year we are entering March in an unprecedented. On the one hand, the legislative palette has been laid out and we know what's on it. We know what is expected and we know what the government has committed itself to. On the other hand, it has never been quite so important that they do follow up on everything they have announced in prior months. And thirdly, it might not even be that important at the end of the day. So let's dive in and dissect all of that. But before we do that, I want to remind everybody that on the Substack right now we've published a preview of the two sessions. Please do check it out, as it's a generally accessible publication, no paywall or anything. Check it out. On the paywall side, we have published on Alibaba and we have published on Tencent. So those are obviously very interesting reports. Check them out. I will not be doing a summary just yet. Obviously, we've touched on Alibaba in last week's episode, but I was promising a summary episode of the entire Chinese internet space. But obviously, that cannot happen not until the entirety of the evaluation exercise is done. This week, we're having JD and PDD. So obviously, those are both very interesting, really quite different. It talks to especially Baidu and Tencent and more akin to Alibaba. So already we're starting to build out a little bit of a reference point. And then a week after, we're going to hit NetEase and Kuaishou, and with that, I think we would have done well in terms of Chinese internet coverage, and we can move back onto semiconductors and hard tech. So those are the plans for the blog. Now, before we dive into the details of the NPC and CPPCC, or the two sessions for short, I wanted to highlight Xi Jinping's article in Xinhua that was published on Sunday night/Monday morning. And the leitmotif of that article is that Xi Jinping has always been a supporter of private enterprise, and that since the 90s, private enterprise has been instrumental in driving Chinese economic foundations, and that since forever it was Xi Jinping's main policy to instill and further market reforms, and that things like the Star Market in Shanghai were his personal initiatives, and he's very excited to bring more business-friendly reforms to the world. We are very excited for. This is exactly the sort of speech that we would be anticipating from him, and we're quite surprised that the market largely ignored it. Well, it didn't ignore it. I suppose Chinese market opened quite positively. It's just headwinds from the broader international markets maybe proved a little bit too much today and perhaps tomorrow as well. But I feel like never has the tone of the government officials has been quite so bullish for China's private economy and the markets. I hear everyone who says that they would like to see formal policies announced. It's just I'm concerned that by the time they actually get announced or still implemented, by that time the market would be twice of what it is now in terms of prices, but each his own. As those that are behind the paywall and can monitor the Panda portfolio performance, we had a pretty good year thus far on these expectations, and we're very much anticipating a pivot in the market where the realization that the reforms are coming becomes the mainstream. Now, what is actually coming? Well, we will be looking at the two sessions. These things have been going on since the mid-50s, 54 if I remember correctly, and the National People's Congress of the two sessions is the more important one. This is the highest legislative body of China where they're actually passing all the laws, and then the Consultative Conference is a consultative body, as it says in the name, but the idea being that this is where the delegates have oral input in formulating the policy that will then be passed at the NPC. Now, of course, it's more complicated than that, and again, as I said earlier, there is a detailed discussion of the legislative processes in China on the Substack, check it out. But this is to say that during this week, there's going to be a lot of speeches, a lot of meetings that will inform the final decisions that will be made at the final NPC. Now, what are we expecting them to pass? First and foremost, the growth number is not going to change all that much. It's around 5%. Although, if you add up individual growth targets by province, you arrive at a 5.3% growth target, which is somewhat closer to what the Panda Perspectives target was for the year, because that's basically how we arrive at that number. And there we have it. The commitment to that number, we just want to see growth being stated as one of the main targets. Growth versus security, that trade-off. We would like to see a greater commitment to growth. In terms of fiscal and monetary policy, obviously all the commitments to the rate cuts and the RRR cut, all of that has been voiced, and that is on the record. So on the monetary front, we don't actually expect that much in the way of announcements in the here and now. But on the fiscal side, for sure, we need to see acceptance of a higher fiscal deficit for the year. How high? And this is where the actual relevance of numbers comes in. To what extent the numbers will matter is hard to say. As long as we're in the trillions, right, we will be dealing with an awful lot of money, and how it'll make its way through the system, how much would actually will be spent, and to what intervals, all of these are almost more important than the absolute numbers. The number has to be big. There has to be a reasonably sized fiscal deficit, at least an extra percent and a half of GDP in deficit is what we're looking for. Anything beyond that is great. Everything in and around that area is fine. The bear case here would be if the Ministry of Finance officials have their way, which is they would be pushing for a more balanced budget, citing the fact that the economy has started to grow on its own. Again, not exactly easy to say what's enough and what's not enough, at least at this stage, because the economy did turn up, and we've noted that in our economic commentary over the past couple of weeks in the weekly wraps that the data has started to come in a little bit more bullish. But of course, these are just green shoots. If they are in fact green shoots, I wouldn't worry too much about it just yet. I would say that it's easier to approve a greater fiscal deficit and not have it at the end than not approve it and then having to go back, because as we found out last year, there is no going back, right? You have to wait until the next year's NPC. So again, it'll be important to see these fiscal measures passed, at least the capacity for these fiscal measures to be passed. In terms of trade, we anticipate that being the reason for why the fiscal commitment could actually be significant, because there will be an assumption that trade headwinds will be significant this year with American tariffs, and just limits to export growth, and exports not being the driver of growth in 2025 to the same degree that it was in 2024. Again, this was always the default case. The question is how much the exports will change this year, which is something we'll observe, because obviously sensitivity to tariffs, the details of these tariffs, all of these things will be interesting to see. And it is exactly for this reason that you need the fiscal capability to compensate for it. And because we continue talking about how important it is to stimulate domestic demand, and that Chinese domestic demand has to come in. And this is, of course, has been the focus of policy announcements prior to NPC, to say that domestic consumption stimulation has to take center stage, that domestic consumers need to be the driving force of the Chinese economy, which we agree with wholeheartedly. But the question is, how much of the money is the government willing to put towards it? And whatever the number, which again should be about 800 billion to about 1 trillion RMB in 2025, of that, how much will go in which direction will be interesting and worth sort of parsing once the policy details will be announced. But therein lies a quandary whereby if we accept, and we've been talking about it in some detail, that the real limiting factor in China is not the income. The real limiting factor has been the willingness to consume. The question is, if your household has 1 million RMB in savings and you're offering it 20 RMB consumption voucher, to what degree does it change the consumption habits? And this is an open-ended question because I don't believe there is a right answer. But at some point, these consumption patterns do change because savings for the sake of savings do not themselves yield a better living standard. At some point, people just want it, right? Which is why it was interesting to see how well the DeepSeek effect has stimulated consumption, and that on a number of our checks, people have been highlighting the same point over and over again, that somehow, with no apparent connection to DeepSeek, people have just started doing more stuff, citing that the pride for Chinese achievements has actually gotten people into a better mood. Interesting, we continue to watch this space, but it was always, the psychological aspect has always been understated somewhat in all of these discussions. We talked about the aggregates and the numbers and the drivers and all that stuff, completely forgetting that the Chinese consumer has been shell-shocked twice. Once with a correction in the property prices and the wealth effect, the negative wealth effect that this has created, and of course the whole COVID policy response thing that is still lingering in the background. Now, of course, we're way past the point where policies are still in place, but the severity of the policies that they chose to implement in some places cannot have a lasting or impact on the Chinese consumer. And I, for one, believe that this is exactly the hangover that we've been experiencing, the two of those things coming together. And so how do you snap out of it? On the one hand, commitment from the government to coax these consumption patterns out of people, and two, through some kind of a positive shock. And DeepSeek just happened to have been one of them. DeepSeek and Neja, the lovely Chinese cartoon, which I would recommend everybody watch. We've had a wonderful time watching it here at home. I would also note that most consumption-related businesses like your Luckin Coffees, Mishua, the bubble tea chain, all of them are reporting or anecdotally talking about high-frequency data as being quite positive, which again is confirmed with the services PMIs and things like that. So the turn in the economic data might be upon us or might have been upon us at late February. The question now is, to what extent do we actually need the fiscal spending? Because after all, isn't the economic turnaround what we're here for? And I would say for sure, earnings are the lifeblood of investing, right? Earnings would have turned based on consumption rather than government policy more so, right? But as we said earlier, the point is to get people consuming, and if the government commitment is what it takes and delivery on earlier promises is what it takes, then that's exactly what we're waiting for. We're waiting on the delivery on these policies, not because we need them to be deployed, but because we need the government to follow through on the things that they've announced earlier. Because if we want to treat government commitments seriously, we want them to follow through. And that might be a very long way of saying it, that we need the policies for the sake of announcements rather than for the sake of their implementation, but nevertheless where we are. Because again, the income has never been the constraint, and that's a very important distinction. Now, I will note that unemployment, especially youth unemployment, is a factor, and that is a constraint on income for a particular group, and this is exactly why and where the government policy can actually be of use, especially to do with making real estate that government buys available for younger people and younger families at cheap rates or low mortgages or zero interest mortgages or whatever form of stimulation they can find. If they create stuff like that and help the younger population with getting on the property ladder, that would be a very significant improvement to the morale, especially of the younger people, and that in turn could boost consumption once again, because again, there is money in Chinese families, it's just they don't end up in the pockets of the younger generation. And through government policy providing jobs and at least pathway to jobs and a subsidy to real estate purchases, that could be a very significant policy move. That alone probably would be a very significant contributor to consumption patterns. Whilst none of it can be announced at the NPC, because we will probably get a fiscal allocation to property purchases, what the government will do with those properties will be determined at a later point, and probably in a narrower circle of people making a decision. But nevertheless, that is something to think about as a potential pathway for all these apartments to be deployed. We remain quite constructive, in fact very constructive, on the outcome of the NPC. A lot depends on it, and as we started at the very beginning and stated the Xi Jinping attitude to this year's NPC is all about private businesses thriving. And that's exactly the environment they want to create, and that's exactly an environment that Chinese companies tend to do well in terms of their stock prices. So we expect more of the same, and we're very excited to be back here next week talking about the outcomes of the two sessions. Let's hope that everything that we're so keen on today materializes. And we'll speak to you next week. Have a good one. Bye.